Hello everyone, welcome to My Finvisor, and today we are going to discuss about all you need to know about unlisted securities. Right. So this video, I'll just brief up the video. This video consists of what are unlisted securities, why one has to invest into unlisted securities, which type of unlisted securities are available, where do you purchase them, how do you purchase them, and who should invest into unlisted securities, and when is the right time to buy. And lastly, we'll wrap up with what are the tax implications on the capital gains which we receive on unlisted securities. Right. So before we go into knowing what are unlisted securities, I'll just give you a brief about what are the common terminology which we come across. Right. So what exactly is a share certificate? Okay. A proof of investment, okay, into a company. When you buy or invest into a company, they give you a bond, and that bond is called as a security. And this security is nothing but what we call as share certificate. So for most of the public limited companies, there are shares available, and these shares, instead of having it on a physical paper, they are dematerialized, and these dematerialized shares are kept with either CDSL or NSDL, uh, the board or the department which has Security Depository Limited, National Security Depository Limited. And then every company will have shares. Okay. So once they are listed on the stock exchange, they are called as listed shares. And the same public companies, before they are listed into stock exchanges, they are unlisted shares. So basically, both listed as well as unlisted would be available in dematerialized format at NSDL or CDSL. So when you purchase, you will have to purchase it through a broker like Zerodha, Upstocks, and Grow for an listed company. When they are not listed on the stock exchange, they are sold in gray markets. Right. So investing into unlisted shares is as simple as it is, you investing into a company in the early stages. I would not say early, but in the middle stages rather. So coming to companies, what are type of companies available? So just before getting into public limited company, I'll just explain you what is a proprietor. So any company, okay, if the member of the company is a single person, it is a proprietor. Now, when the member participation members, okay, the number of investors in the company are from 1 to 200, they are called private limited companies. And if the number of investors or the shareholders are beyond 200, they are called as public limited company. Of course, there are a lot of companies, government company, public holding company, government holding companies. Okay. But in terms of members, participating members, these are the major three categories. So these are the public limited companies. So now just getting into a business, just take it as an example, this line. Okay, this is the start of the line. Okay, now let us take this car is moving from point A to point B. So it is taking close to around 3 seconds for the car to reach from point A to point B. Now there is a car, then is another car which is going at a quicker pace, completed from A to B in just 1 second. Okay, so what would be the difference? I would say, what is the major difference between this car and this car? Of course, the make of the car, okay, that is anyways available. But apart from that, the fuel does make a huge difference. Firstly, if you have to run quicker, you will have to have more fuel, and of course the quality of fuel also to be higher. Now I'm just taking this example into an organization. Let us take a company, okay, is scaling from point A to point B as in the above car, okay, and a point A to B in the below car. Okay, now what is point A? Start of the company, that the company's valuation is 0, and let us say this B as 10,000 crore company, making this company 10,000 crore company. That is when the share prices of any company builds up, right? So what would be the fuel? Okay, obviously the fuel is to run the show, and to run the show, for running a company, the first thing the required is capital, that is money. Okay, so as I've said, not just the quantity of capital, it is also the quality of capital. Now, what is quality of capital? Let us assume how businesses get money from, how do they invest money into, or how do they get this capital from? The first thing is reinvesting profit. Okay, now if you earn 100 crore in the first year and you reinvested 100 crore again, and then in the second year you get about 120 crore, and then subsequent year you get sixth year or seventh year you scale up to 200 crore. So you keep on investing the profits which you are making, but in the initial phases the profits would be not as good, or sometimes you will have to shed out more money as well. So this is one way which will end up going into 3 seconds. It is a slow and steady process. You don't get the appreciation faster if you reinvest your profits. So let us take that up. Now the second one is loan and debt. You take loan from banks, invest into your company as a working capital or whatever as a capital, and you start doing the business. So you'll have to end up paying interest on the loans which you take. So what does happen is it will eat up your profits. So once it eats up your profit, it is very impossible to build valuation of the company, right? So this is also, and the reinvesting profits is, you can take it as a quantity of capital. Okay, so you lose quantity of capital when you choose reinvesting profits, and when you choose loans and debts, the quality of capital, okay, is bad. So what happens is you'll end up paying interest to bank. Now the third option is investment. So investment is obviously right, because you don't pay any interest to the investor, and you can get it anytime, and you can get as much you want. Okay, so how do company brings in the investments into the business? So these are the simple phases. So first thing is seed capital, wherein you start your business, you put up some 10 lakhs. Say that a company is just started, it has put up some 10 crore or 20 crore into the business and started. And then there are angel investors who are just like partners in your business, wherein there are some 10-15 people, and they have made it into a private limited company, wherein some people have come into the board and they have invested money, and you have scaled up your business with the investment. And the third is the venture capital. What exactly venture capital is? There are capital firms like, A&T Capital. You read in startups, right? In startups, you get news that XYZ company has raised 800 billion, 10 billion, 20 billion, or sometimes 100 million through a Series A funding. So all this Series A, Series B, Series C funding is coming into venture capitalists. So venture capitalists put into money as again investors. And then private equity. What is private equity? Private equity is that, the venture capitalist has come up, and then still the company needs money, so then they sell their shares into private markets. So that is private equity. And then the last resort of raising money into the company, bringing in capital, is initial public offer. So in initial public offer, that is when they exchange on, they put their shares on stock exchange. So here the proprietor, either the founder or some of the, they have to declare to the exchange, SEBI, that they are going to raise this much of money, these many shares, or is it an offer for sale? That goes into an IPO. And this is when this goes into IPO, all the mutual funds and also the retail investors can buy through stock exchange, on stock exchange. So seed capital is nothing but initial money invested into a company. And then, as I've said, this is, and then last goes to the IPO. Now, where exactly these unlisted shares are available, okay, are exactly in between the private equity and venture capital. Okay, so all portfolio management services, they also buy some shares on unlisted equities, wherein they invest in the budding stages of the company. So these are simple unlisted shares which are available. So why you will have to buy unlisted shares? Top reasons of buying unlisted shares are, these keep away from market sentiments. So when you see a stock exchange has dropped by 3%, okay, index has dropped by 2%, index has sometimes shot up by 2%. Okay, all this is happening because of the sentiments which are driven in the market, not because that the company suddenly, आज company का value, I mean today the company's valuation has dropped, and that is the reason the market More than that, it is the driven by the sentiments in the market. So these stay away from the sentiments because there is no large scale participation which is happening. And then these come at great valuations because you are investing in the middle stage of the investment. So as the investment goes on, you are also the existing share value will increase. And of course, since you buy at a very, very low valuation prices, you get higher returns as well as you sell them after the listing, right? And most importantly, like any unlisted share, you can get bonus shares. If the company declares any dividend, you get the dividend. If the company splits the share, you get also the splitting bonus and everything. So all these are which are entitled for a listed company also are entitled for unlisted shares. Now, which unlisted shares you will have to, one has to invest into, if he has to invest into, then which. So let us understand the types of unlisted companies which are available. So the first one would be the big elephants. These are subsidiaries of well-established parent companies. And then there are age-old, well-known companies with proven track record. You know these companies from some 10, 15, 20 years, and they also are proven very good in the company in the long run, but they are not yet listed. And then the new age startups with good financials. You will have to, of course, understand the financials of the company. So just quoting some examples of subsidiaries of established parent company. Reliance is a parent company. Reliance Jio, Reliance Retail, these are available in unlisted market. And then Tata Technology is one of the gems of Tata Group, which is more into getting up electric vehicles and all this stuff. And then Adani Wilmar, okay, is the well-known company of a subsidiary, well-known subsidiary of a Adani Group. And then well-known companies, Merino Laminates, the laminate industry, the interior laminate industry today, the way houses are being built up, the real estate and the offices are being built up, something interior laminates are must and should. So these are some certain companies which are well known. They're available since ages. Philips, everyone knows Philips lighting. And then studs accessories. You go on a motorcycle on the street, the first thing you get up is put up a helmet. More and more, not just the urban but the rural cities are also coming up with helmets, and the awareness is growing. So these are age old companies. These are not listed only because they haven't been into the final stage of raising the funds. They are good companies who have good financials, enough capital to expand further, right? And then Cochin International Airport, Kannur International Airport. So these are airports which are already there, right? And the new age startups like Oyo Rooms, Orbis, Market Simplified, Ola, all these are new age startups which has great potential. And so these are some new age startups where we can invest into. So now which one to invest into? Of course, I don't say you just have to invest into one thing. Have a right mixture of having your portfolio allocation, some 30% into these well-known subsidiaries, because they are lesser risky, very less risky, and they can also give lesser rewards because these are already in demand. And then the new some percentage of allocation, maybe 30%, 40% of allocation into these companies which have good growth potential and available at good prices. And then the new age startups where it is risky to invest into, but yet again you have high reward ratios with this. So some part of your portfolio should run behind the reward, and some part of portfolio should actually protect your capital. So what percentage of this, you will have to calculate this based on one's psychology of handling money. Also there is age factor which is there into, and the risk appetite. Basically what is the investor's risk appetite, that you will have to understand. And then put the allocation. So it can be 10% into this and 60% into this. Sometimes it is 50% into this and only 10% into this. So this all depends on what percentage of, but it is always better that you diversify your money, not all money to be flown into one company. And you'll always have to distribute it at least in 6 to 7 companies. So that is how the investments are to be. And then where to buy from? So it is very simple. There are sellers available in the market. Who are these sellers? They are usually high net worth individuals who have put up the funding in the initial stages, the angel investors and venture capitalists, wherein they have put the money in it, they have put the money into the company at a very early stage, and they get good capital appreciation, so they sell it to buyers. And there are buyers again who are HNIs and usual public, and in between are these intermediaries. So that is me, where I sell unlisted shares to buyers or prospects who are interested into, and take the shares from the sellers. So what exactly we do here is we ensure that the shares which are available at the seller are coming to us, and then the buyer's money is released to. So that is what we exactly do in between. And then how do you buy? So firstly, what we do is we take the risk assessment. As I've said, what is the risk assessment of the investor? So once we assess, as we get the score, then we give a personalized bucket quote, where how much of allocation should go into which shares. And then based on the bucket and the quote, if it is interested, then the investor gives his demat documents. What are demat documents? It is very simple. Your Zerodha or your Upstocks or whatever your broker is, he just give you a CMR copy. That CMR copy is the account number of your demat, which is available with CDSL or either CDSL or NSDL. So these demat documents are required, because that we have to transfer the shares into the demat account. And then the payment comes in. Once the payment comes in, the shares are allotted into the demat account. So once from 7 to 8 business days, once you put in the money into the demat, once you transfer the money to us or the two intermediaries, then they take usually, it depends on again the depository. If it is an NSDL and if the shares are available in NSDL, it will hardly takes 2 to 3 days. And if it is CDSL to CDSL, again it hardly takes 2 to 3 days. But if it is an inter depository like NSDL to CDSL or CDSL to NSDL, it usually takes 7 to 8 business days from the date of payment to the shares reflection in the demat accounts. So you can check the shares of the company in your own demat account, wherever the trading account would be. So you just have to open it and check it. So who should invest into? So who is well versed with his individual financial planning? So this we do to all our clients, wherein what amount of money has to be put into emergency fund. What is emergency fund? There is a sabbatical, you lose your job, or someone goes for a sabbatical, there is a dispute at house, and you will have to settle down the issues, and you take a break from your regular income source. So that is when you will have to require your emergency fund. So this emergency fund should not be in your just savings account, because money in your savings account will always make you poorer. So invest in such instruments which give better returns than normal inflation level. And also whenever you wanted to withdraw the money, that should be available, and there should be no cut at the time of withdrawal. So this is emergency fund. And then retirement planning, goal setting is a very simple thing. And whoever are already investing for their child's marriage, or for their child graduation expense, or his own retirement, whoever is investing well versed into it. And of course the protection, whoever is protected well. So these are the people. Okay, the remaining surplus, as when the remaining surplus post investing into all this, that should go into unlisted securities. The reason unlisted shares are very good wealth creators, but again these are extremely risky. Okay, the reason why I said extremely risky is that you will have to understand the financials of the company. But again here, without proper retirement planning, without investing right into your retirement planning and financial goals, it is not beneficial to enter into unlisted securities. Once you are well versed, and then if there is any surplus which is remaining, then you will have to invest into this, because this gives you a very good diversification. You buy shares, and instead of buying shares, if you are investing into mutual funds, you're already have recruited a fund manager to take care of your portfolio of equity shares which are being bought as a mutual funds. So you have already put in. So this gives you a good diversification. Now, when to invest into it? So firstly, invest only when you don't need. As I've said, uh, these are instruments which are good for long term. These are not any good instruments if you're looking to withdraw the amount in short term. So just put the money which you do not need for next 10 years. You don't need to withdraw this money for the next 10 years. This is when these gives fantastic returns. You will have to hold these for at least 10 years so that you get superb benefit out of them. And then there are good stocks. You'll have to wait till the seller is available for all these good stocks. Okay, as I've said, there are very good small micro cap companies, new age startups whose financials are extremely great. So you will have to just wait for the seller availability. Not that you have money today and you wanted to invest today. You will have to understand whether the seller is available for the good script, and then good price. You have a very good script, but if the valuations are 600 and you are buying at 1000 rupees, that is when you make the mistake. You don't get the right appreciation. You'll have to wait for the good price to be available. So we will notify you when the prices are attractive, when the prices are good. So only thing is you will have to just call us and notify that I am interested into unlisted shares. Just keep me notifying on what are the companies available. And then the last one is, this is a thumb rule, I would say, all these four. And the last one is very important thumb rule, that invest before IPO. Do not wait for an IPO to be announced, because once there is a IPO is announced, people jump into buying. Then there is a fake demand which has come up and you will end up buying at a higher price. Okay, always invest well in advance so that you buy at a very lucrative price. Right. So what experts have to say about unlisted shares? There are a lot of articles on how unlisted shares have given the returns. So here is ace investor Mr. Rakesh Junjunwala, who had once in a live session, he told that over last 10 years his unlisted portfolio has given a great return than the listed portfolio. And then there is another article in Economic Times where in 2019 unlisted shares have given far better return, or at least they haven't dropped much, if I have to say, in the pandemic. So last, as I've covered what, why, when, all the questions, and then the last, which is important, the tax implication. Right. So whatever we invest into, or we recommend you to invest into, we'll also have to understand the tax cut at the time of withdrawal. Right. So let us see an example, understand the tax implications with a simple example. Let us say you have bought ABC Corporation unlisted share at 1000 rupees and the year of purchase is 2010. Now in 2020, the share price has increased to 5000 and you have transferred or sold it at 5000 rupees. Now there are two outcomes. The ABC Corporation has already listed, okay, in 2020. Then long-term capital gain is 10% apart from 1 lakh capital gain. So if your capital gain is, what is your simple capital gain? Selling price minus purchase price, that is 5000 minus 1000. 4000 is your capital gain. So 10%, okay, is 400 rupees. So this long-term capital gain is calculated all across, not just unlisted share, but listed share also. If your profits are more than 1 lakh, then beyond 1 lakh, let us say if you have 2 lakh capital gain, then capital gain is calculated on just 1 lakh, because 1 lakh is the normal exemption limit for every assessment year. Now coming to short-term capital gain, this is very unlikely, wherein you sell your unlisted shares within 1 year. If you sell it, it comes under normal income tax slab. So if you are in 30% income tax bracket, you are axed at 30%. If you are in 20% income tax bracket, you are axed at 20%. So this is very unusual because you're not allowed to sell an unlisted share from 6 months of listing the company. So let us say if the company is listed in January, you can sell those shares only after July in the open market. Okay, so this is very unusual. Now let us say even after 10 years this company is not listed. This can be the reason that the company is very well into financials. Let us take an example of Reliance Retail. Ambani has a lot of money. He doesn't need to. Mr. Ambani has a lot of money, so he doesn't need to raise money through IPO. Okay, he has enough investments for his future goals. Okay, or future expansion of the company. So he doesn't need to go for an IPO. So that is when this is still unlisted company. Okay, so long-term capital gain beyond 2 years. Okay, if the holding period is more than 2 years, it is tagged as 20% tax on capital gains with indexation. So this is where the complete game is. What is indexation? Indexation gives you the benefit of changing the buying price with in comparison with the inflation prices. Okay, let us say your buy price is 1,000, and let us say the inflation has grown up, so the same 1,000 rupees is worth 5,000 in some other year. Okay, so that is how inflation is calculated. So let us see the calculation of how to make the tax calculation. So first thing is inflation index. You get it on Google. Okay, just type inflation index in 2010. I have just taken here an example of 100 for a simple calculation, but it was something around 180 rupees. Okay, then inflation index in 2022. Why 2022? It is because that is the year when you have transferred the shares. And why 2010? That is the year when you have purchased. So assumed purchase price equal to 1,000, which is the original purchase price, into inflation index in 2020 divided by 2010, that is 300 by 100. Okay, now what is that? 1,000 into 3, that is 3,000 will be your purchase price. So how is the capital gain calculated? 5,000 minus assumed purchase price in the year of 2020 as 3,000. So your capital gain has drastically reduced from 4,000 to 2,000. And your long-term capital gain is 20% with indexation. So with indexation, your capital gain is 2,000. So you're axed at 400 rupees. It looks like the same, but this calculation always differs, because if the year of selling, okay, I'm sorry, this is selling, year of selling. If the year of selling is 2015, then the inflation index would have been 200, and your assumed purchase price would have been 2,000. Okay, 5,000 minus 2,000 is 3,000. 20% of 3,000 would be 600. So it depends on number of years you are holding the stock, and also it depends on if it is listed or not listed. And then short-term capital gain, if you are holding less than 2 years, buying an unlisted share and selling an unlisted share also can happen. And if your holding period is less than 2 years, it again falls under your same tax bracket. So short-term capital gain remains the same even if the company is listed or if the company is not listed. All right, so that's it. We have come to end of this session. So I've explained all the questions about unlisted shares, and I've told you the tax implications as well. But at the same time, there would be a lot of questions which you would be having. I wouldn't have, thought of that, and that is the reason it is not presented over here. But if you feel that, something is not explained over here, or you wanted to have some clarity, you wanted to put up some question, please do drop in the comment section. I would reply not less than 60 minutes. I'll try my level best to reply to you as soon as possible. And then you wanted to know about unlisted shares, you wanted to purchase the unlisted shares, I'm always there, just a call away. Please do ring me up or mail us. We are there at your service. And last but not least, something which is very encouraging to me, if you have liked the session or if you have liked the video, please do like, share and subscribe. Do share it to your friends who are looking for unlisted shares, or who are thinking about unlisted shares, or who wanted to know about unlisted shares. Please do share to them, and subscribe and hit the bell icon. There is a lot of content which is coming into this channel, all about assets, how to build assets, what are different types of asset classes which are available, where to invest into, when to invest into, everything about money. you are going to get content on this channel. So do subscribe and press the bell icon. Do not miss any of my informative session videos over this channel. Thank you all. Goodbye.